What's going on, guys? Welcome back to another video here. In this one, we have another NEO update. We're going to be talking about Chinese markets, and again, from a perspective that I don't think a lot of you guys have heard before. And I hope you guys are ready, because this is about to get very interesting, very exciting. We have a lot of awesome information to talk about, especially as it relates to the aggressive amount of short interest in the Chinese markets right now. We have some really interesting news coming out of China today. We have some Tesla China delivery numbers that we have to talk about as well. So again, guys, before we get into all of that information, if you guys do enjoy the information and the type of analysis that I provide you guys on this channel here, make sure you go down and hit that like button. It costs you nothing to do it, but it helps me out a whole lot in spreading this information out to as many people who actually want to learn. And if you guys aren't subscribed yet, make sure you guys go down, hit that subscribe button, turn on notifications so you never miss another video like this. And again, little shameless plug here. If you guys want to hop into my private mentorship community with those short-term trades, I'll pop up some of the screenshots from a couple of the trades over the past few weeks here. I mean, again, guys, you guys get both the educational courses, the private live streams, the macro research reports, the single stock research reports, the pre-market plans, the full watch list of stocks and cryptos that are about to explode before they do. If you guys want to get 50% off your first month, make sure you use code TRADE, link down below. It literally only costs you $1 a day, but just for those of you guys that are interested. Now, enough on all of that nonsense. Let's start talking a little bit about the chart of NEO here. Now, in the last video that I made, again, we talked a lot about this zone that we have down below us here that is really kind of serving as a strong area of support. Now, again, if you want to hear my overall thesis on just NEO specifically, make sure you guys will go watch yesterday's video. But I'm really looking towards NEO hitting that profitability goal by the end of 2025 and early 2026. This is more kind of on the longer term side of the position trading that I usually do. Those of you guys that are in RKT still from recently, I mean, the bond market is something that I kind of have a little bit of a specialty in. You guys have seen me call the tops and bottoms in the bond market recently, but those are a little bit more short term. This is going to take a little bit longer to play out if it is going to. I really want to see those numbers hit. And again, nice little day here on NEO, up about 2.5%, bouncing right out of this zone. We do have a big catalyst coming up next week with earnings Tuesday, March 11th. But again, I'm not really expecting a whole lot to come out of that earnings, but it will be very interesting to see a little bit of a deeper insight into how the company is performing financially at the current time. Now, when we think about NEO, in my mind, this is just another way to take advantage of the potential moves coming in a lot of these Chinese markets. Now, in April of last year is when I started to establish my long position in what's called yin. This is 3 times levered long China. And here's what we're going to start talking about. If you guys, again, watched the video from yesterday, that big picture understanding of what's happening across the broad market. So right around here is where I started buying. We had this nice move to the upside, kept holding. We saw this nice little drawdown back to my entry. The thesis really stayed the same though, and then we saw an explosive move to the upside, and I ended up selling half of my position on this day right here at about 51. So I have a risk-free position in China there, and I've been searching for some more of these different Chinese companies that, again, I could allocate capital towards, and then take advantage of these movements in China. But the one thing that I really want to start talking about with you guys, again, I'm not sure kind of your level of market expertise, and what I really want you guys to get away, come away with these videos with is a better understanding of the market. Now, thinking about the big picture here, there really has not been a really solid opportunity in a lot of these other markets in the world besides the US markets for a pretty extended period of time. Now what we're starting to see though is something a little bit different. You're seeing the dollar starting to lose a little bit of its strength here. Now there's a lot of other factors that are taking place with the dollar right now, but what you also have to understand, and one of the things that we talked about yesterday, is that if a lot of these large investors are going to look at a lot of these US companies and put a lot of capital into them like they were doing, especially in the AI space over the last, let's say, year, they could then look to another market like China and say, okay, these companies are either performing as good or sometimes a little bit better, but they're trading at significant discounts. So you're seeing what's called repatriation. It may not actually be repatriation because that would entail the investors are actually from China, but it really just kind of shows that money, when the US markets are having a little bit of volatility like they're experiencing right now, money is starting to flow out of US markets and into other markets, and one of those is China, and you continuously see that reflected on the charts of these larger Chinese ETFs and different kind of market metrics that are going to track the performance of these other markets here. Now, let's talk about this short interest situation, short squeeze situation that a lot of you guys are probably interested in and you have not heard yet. Now, let's first take a look at what NEO's short interest is. Well, it only has right now approximately about 9.66% short interest. So you might be thinking to yourself, going back to kind of like those GameStop days, well, that's not really that high of a level of short interest. But when we move over here, remember, we're thinking of the big picture here and talking about these Chinese markets, and the movement in them is kind of the tide that is going to raise all boats. When we look at FXI, the Chinese ETF, which yin is effectively the 3 times levered version of FXI, that's why I bought that one instead of just FXI, to get a little bit more potential long exposure. The short interest is now reaching record highs. Now, this could be from a variety of reasons. You have seen these Chinese stocks start a pretty significant move to the upside, and this could end up being some form of hedging these long positions that are now sitting at a pretty significant gain. Now, what this also could be, kind of on a little bit more of a bullish narrative, is that these shorts are piling in and have the same thesis that they did throughout last year, the year before that, that China is what people are deeming to be uninvestable. They do not like the regulatory environment over there, and they do not see a reason that these stocks are going to have success due to a lot of the geopolitical factors that are always affecting these Chinese companies and the tensions that come along with it. And you're starting to see a lot of those play out throughout kind of this new administration that we have. The other thing that we have to think about with China here, not necessarily just that repatriation, moving money from US markets to other markets, but also the fact that China is really stepping up here and trying to stimulate their economy. We just got this notice yesterday. China ramps up stimulus to guard economy from changes unseen in a century. Growth target set at about 5%. Debt and deficit to rise. So more stimulus is coming. So again, when we look at this right here, like I said yesterday, I don't necessarily think that the main reason why you want to be putting your money into Chinese markets right now is that continued stimulus. It is definitely a factor, but it's not the main thing in the big factor that it was last year. We also have some more information over here today, which is very interesting, from the Chinese embassy in the US. If the US truly wants to solve the fentanyl issue, then the right thing to do is to consult with China by treating each other as equals. If war is what the US wants, be it a tariff war, a trade war, or any other type of war, we are ready to fight till the end. Now, that's a big statement that was made by this embassy, but what it really means here, and the way that I'm interpreting this, is China is going to do anything in their power to make sure that their economy is going to continue in the direction that they want it to go in, growth, which is why also you're seeing those new notices of more stimulus coming in. Now, one of the last things that I want to talk about with you guys in this video here before I send you guys all on your way, again, hopefully I'm not throwing too much information at everybody. If you guys have any questions about anything, make sure you drop a comment down below. I'll answer any of your guys' questions that you guys have. That's what I'm here for. We also received some new shipment delivery data out of China as it relates to Tesla delivery. So Tesla China shipments tumble, the latest sign of weakening demand. The Tesla shipment data out of China is not good, and is the latest piece of bad news for the pure EV maker. The China Passenger Car Association reported Tesla shipments from China fell to 30,688 in February, plunging 49% compared to a year ago per Bloomberg News, and is down more than half compared to January. Meanwhile, wholesale sales of new energy vehicles in China for the month hit 840,000 units, up 82% compared to last year. Now, if Tesla is struggling in China, and as we all know, NIO does have that sub-brand Onvo that is competing directly with the Tesla, I believe it's Model Y, that is going to be a good thing for NIO moving forward domestically in the Chinese markets. But again, the Chinese markets for EVs are incredibly competitive. So again, not great news for Tesla, potentially good news for a lot of these Chinese electric vehicle makers there. So guys, that is really going to wrap up this video here. Hopefully, and just to kind of wrap everything up on a little bit of a bow here, we do have NIO bouncing right out of that area of support that we were looking for it to bounce out of. Obviously, it is lagging still versus a lot of other of these Chinese companies, mainly due to the fact that its financials need to catch up. And that is one of the main reasons why I'm starting to allocate capital to this company there, along with that overarching Chinese thesis that says, okay, a lot of this money is starting to flow into Chinese markets. We're seeing the Chinese markets outperform the US markets. We're seeing that repatriation, a lot of these different tensions that provide a really solid backdrop for new investment into China. We're seeing large institutional money managers put money into there, specifically David Tepper. But again, that large China thesis isn't really going away. And then along with that, there are going to be people that are going to be taking the other side. That's why you're seeing that short interest moving significantly to the upside. Obviously, you're seeing that China stimulus moving up. You're seeing China wanting to obviously defend its own economy there. And then Tesla coming in and really having some trouble in the Chinese markets there. So again, guys, if you have any questions about anything, make sure you drop a comment down below. But if you did enjoy this video here, make sure you go down and hit that like button. Costs you nothing to do it, but it helps me out a whole lot in spreading these videos out to as many people who actually want to learn. But until next time, guys, peace.